All right. Thank you, David, and Timing Research for having me. Thanks everyone for joining us. And we've got a lot of material to cover here, so we'll get the show on the road. We're going to talk about our favorite indicator for trading options and how we can automate our options trading using professional strategies. We have trade alerts that are interactive, so you don't have to place the order by yourself. So you can set your positions on what we call autopilot, and our automation will be able to close out those positions for you according to risk and profit management rules. So you don't have to screen watch or be tied to your desk all day or all morning. Talk about some of the mistakes that option traders make, and especially the one rookie strategy that we want you to avoid. And also, we're going to kind of wrap this all up with us. So you have technology, and then the final, I guess, piece of the puzzle would be real people helping you along the way with coaching and so forth. So remember, we're speculating, and whenever there's opportunity for profit, there's always risk involved. So we have to keep this risk disclosure in mind. I know there's a lot of words there, so feel free to take a screenshot of that or a picture. And really, the most important thing is use risk capital when trading. And there's always a risk of loss, of course, when you're speculating. And past performance is never a guarantee of future results. And I am Erik Gebhard. I'm a co-founder of Altivest. I have a BS in business administration from USC, or University of Southern California. I have various securities and investment licenses, former Series 6, Series 63, mutual funds, annuities, insurance, and I currently have my Series 3. That's for commodity futures traders, and my Series 65 for investment advisors. And a little bit about Altivest. Since 1997, we have been a registered introducing brokerage firm, having traded tens of millions of contracts along the way. And there I am in the middle of some of my colleagues and my business partner, Mike, there. And that's on the trading floor at the S&P 500 options pit in Chicago Mercantile Exchange. And that was, gosh, it doesn't seem long ago, but that was maybe 15 years ago. And that's all kind of gone now. And that's a little bit of what we're going to talk about, is the shifting of the technology. And again, we're a registered introducing brokerage firm, registered with the CFTC, Commodity Futures Trading Commission, and member of the NFA, or National Futures Association. We're located in California, and we created a unique option strategy and the order execution technology to handle it. And we'll show you about how that works. And we're going to do a demo here, and we're going to get into that in just a minute. And maybe you've seen us before in some other presentations. We try to do as many as we can. We've done a lot of things before the pandemic, actually in person, but a lot of it, of course, is now online. And we often get quoted in the financial press. Here's an example just a couple of weeks ago talking about gold, looking for our opinion here on gold, and spoke to my partner here, Mike Armbruster. But anyway, so if you've seen us, that's great. If you haven't, that's fine too. We're going to have fun here. And I want you to think about this. This is kind of feedback from, I guess, really all of our clients and all of our experience in years of trading. What do you think are the top 3 barriers to trading? So kind of think about that as we go through these 3, and maybe which ones you relate to the most. How about confusion? Just a lot of conflicting noise and targets and opinions and narratives, a lot of clickbait. This is a good example. Here's the S&P 500 year-end 2025 projection from all the major financial firms. And you can see the range is anywhere from down 25% to positive 18%. So I put this up here because how would you know which one to believe? So I don't know. I don't know if anyone knows the answer, but they all have their different outlook and a different opinion, of course. And then here's a little bit of technical analysis humor. But this guy here says, according to my calculations, the stock market will fluctuate today. So that's just a lot of information, a lot of noise, and really it's hard to filter through all that. And how about time? The second barrier. How much time do we have in the day? Well, we all have the same amount of time, but what matters is what we do with it. So you need time and discipline to be able to do this if you want to do like shorter term trading. Not many people have, really the wherewithal, the time, essentially to have this type of setup. And here's a person sitting from the market open till the market close in front of their computer, watching open positions, looking for opportunities, and once in a while after market hours. Now, if you're able to do that, that's fine, but that's really not practical for most of us. And we'd probably rather be doing something else anyway, rather than glued to our screens for, maybe 6 hours, 7 hours. And the third thing here, the third hurdle, really is us. We're humans. We have human emotion. The two biggest ones when trading, I guess, would be greed and fear. So we ride that emotional roller coaster as we're trading. You get on this cycle and you're really optimistic as you start out, and then you get euphoric. You have some winners. Things start to fall apart. Maybe you wave that white flag of surrender. Sometimes you get depressed, discouraged if things aren't going well. And then maybe you see a glimmer of hope. And then you kind of start that whole cycle over again. So we would like to do what we can to control our emotions. So we need the tools and the strategies and the techniques to be able to do that. And before we do that, or before we get into the demo, which markets are we talking about trading? So we're going to look at options markets on stock index futures, and we'll show you why in just a second. And you can use options for hedging, maybe hedging your portfolio of traditional assets. Of course, you can speculate. And these are highly liquid instruments, and these are the major benchmark markets we're looking at, such as the S&P, the NASDAQ. So we're looking at the E-mini stock index options markets. And why are we looking at the E-mini, S&P 500, for example? We're going to start off with that one. Well, one reason is it's practical. You don't need to sort through 6,000 other securities. We're trading one market, one index. And the mini actually is, sort of a dichotomy here, or an oxymoron. The mini can be huge. So the E-mini S&P 500 futures market, it outtrades all ETFs around the world by over 2.5 times. So that's from the CME group. You can see this red arrow pointing to that here. So there's over 6,600 ETFs around the globe, and the E-mini S&P 500 futures contracts trade more average daily dollar volume than all of those ETFs combined. That's astounding. I hadn't really contemplated that, and when I read that, I was like, wow, that's even bigger than I thought. So these E-mini S&P 500 option contracts, now we're talking about the futures contracts here. So if the futures contracts are active and liquid, well, let's see what the options are doing. Well, here are the options on the E-mini S&P 500. Average daily volume here, over 1.5 million contracts from last year. One of the most liquid markets, option markets in the world. And then, so we're talking about which options markets to trade. Well, what strategies do we use? A lot of different strategies you can apply. Well, why don't we trade according to how Wall Street trades? The institutions, the professionals, the hedge funds, the money managers, they are collecting premium. They're trading option spreads. These are multi-leg option spreads. We're going to show you more about this woman here in just a minute, and I'll quote her article here. But she says an option spread is buying and selling different contracts. It's a common way for investors to hedge risk and volatility. It's usually cheaper because you can offset your cost by the proceeds from different contracts. And this is the most important thing here. It's been used by Wall Street professionals for decades. So if the professionals are trading option spreads, then maybe we should too. But before we do that, let's learn a little bit of Greek. And this will be helpful. If you know some of the option Greeks, this is something you already know. And if not, we'll go through this quickly and make it nice and simple. First letter of the Greek alphabet here we're going to look at is delta. That helps us determine probabilities as options traders. And the definition is how much does the value of the option change with a change in the underlying index or asset price? And options traders look at it as the approximate probability of expiring in the money. So that's what the delta means if you're an options trader. And that's how Okay, and then here's an example. If there's a 0.25 delta, that means there's a 25% chance that option would expire in the money. But we look at the inverse of that. That means there's a 75% chance that option would expire worthless. So remember, delta is a number that's always moving with price and time. It does not sit still and remain static. And it is not the probability of a winning trade. So keep that in mind. If you place a trade on an option that has a delta, zero point 0.2 and you sell it, that doesn't mean there's an 80% probability that you're going to make money on that trade. Okay, the second letter here we're looking at in the Greek alphabet would be theta, and that just represents time or sensitivity to time. Remember, every option does expire, has limited lifespan. It's called a wasting asset or decaying asset. So theta is a negative number. It equals 1 day of time decay. And remember too, you'll never have to calculate deltas and thetas. It's always done for you. So, don't sweat that one. And so if the option's at 10 points, theta is negative 0.05. So the next day the premium drops to 9.95, and the next day it decays down to 9.90, and so on and so forth, just for illustration purposes. And here's a graph. You can see here as you approach time zero, the amount of premium on that option starts to drop and drop and drop. And especially in the last 30 days or so, it accelerates that theta decay. So that's sort of what happens to every option. It eventually expires and runs out of time. So theta goes to zero. So what are professional option spread strategies? Here's a couple examples. Why not sell an out of the money call spread? Maybe if you're a little bit bearish on the market or a little neutral even, here's the market, the blue line trading away, and maybe you think it's not going to go a whole lot higher, and you sell an out of the money call spread and collect premium. And we'll get into the details here, but the red line represents the call that you sell, and then you buy the blue line, which is a call that you buy as hedge or protection. But the net result is you collect premium for doing so. And that's a covered spread. These are not naked strategies. Here's a non-directional strategy. It's essentially you take this call spread and you sell an out of the money put spread at the same time. It's called an iron condor. And you see this black vertical line here. You look for the market to stay really within that range. So if it chops around, you collect premium on the calls and the puts as well on a net basis. And you can see that vertical purple line, that's the expiration date on this particular strategy. And then there's something called the dragonfly. We came up with this. This is our own proprietary creation and technology to execute these orders. And it's also a non-directional strategy, and it looks similar to a condor, except you add another leg. And here's the market trading along, and then you see this blue arrow is where you buy back the spread. So you sell it for a certain price, and then as time goes by and theta decay works, you intend to buy it back later for less than what you sold it for. So instead of buy low, sell high, you hope to sell high and buy low. And you can see this blue arrow down here, and you see these blue squares. This is called the RTI. This is the risk thermal indicator. So we're talking about favorite indicators today, all day long, and yesterday as well. But this is what we use, and we're going to show you how it works. And this can be automated so that when you get a blue signal like this that says take profits, it'll be automated for you. So stick around in just a few minutes. We're going to jump into a demo, and we're going to show you how to respond to a trade alert as well, just by simply touching accept or reject. So these are professional option spreads created and managed for you by algorithms that we created. So our technology is called Theta Trader, and these are automatically generated or pre-built option strategies and spreads. Our algo creates what we call theta trades on a daily basis. And also part of that functionality are the one-touch responsive trade alerts. So those get sent to you and you don't have to do anything other than touch accept or reject. And options are flexible. They can be used in any market condition, a bull market, bear, flat market, or non-directional, neutral, whatever you want to call that. Then we have the automation with the risk and the profit tracking, something called the risk thermal indicator. You saw that blue square there, and we'll show you how that works here in just a moment. So let's run into a quick demo here. Let me shift gears and change screens. All right, everyone. You should now be looking at my ThetaTrader dashboard. And here is just a brief overview of the dashboard. This is the demo account I use for presentations, but a real account that you would have would look almost identical. And you'll notice up here, you have active trade alerts, and I'll show you more about that in a moment. Then you have your theta trades for the day. Then you have any open, short, or sold option strategies here, or spreads, and any long or open bought positions down below. Then to the right, this is your account information. So ThetaTrader is integrated with your AltaVest trading account. Remember, AltaVest is the brokerage firm. ThetaTrader is our technology for trading options. So you would have an AltaVest trading account. And then any of the quotes here on the indexes. So let's look at this first. You'll notice there are bullish strategies that are pre-populated, bearish, and then neutral or non-directional. And then you'll notice too, we're looking at the E-mini, S&P 500, NASDAQ 100, and Russell 2000. So the algorithm that we have behind the scenes is basically creating all these different trading opportunities. You have a choice anywhere from, in this case, anywhere from 17 to 38 days till expiration on these different strategies here on just being in put spreads. Here's call spreads. If you're bearish, you've got all the strategies populated here. And then if you're neutral or have a non-directional bias and you want to just collect premium and you think the market might stay in a wide range. So let's look at some examples there because we kind of looked at that in just a few minutes ago with the condor and the dragonfly. So here is the iron condor that has 38 days till expiration. And you'll notice the strike prices are pre-selected for you, as is the expiration. And the first thing I like to do is look at a graph, and it gives you kind of a, I guess you say, a bird's eye view. So here's the market here. You're selling this out of the money call spread, and simultaneously you're selling an out of the money put spread, and you're collecting net premium on both sides, the calls and the puts. The vertical line here, that purple line, that is the expiration date. So if you go back, you'll notice this table has all the details, and we don't have all the time in the world to go through everything, but you can see here 38 days till expiration, your put risk, call risk, your commissions, your cash required, your acronym here is your maximum profit potential, so on and so forth. This is your targeted annualized return, and that number is there really to compare one trade to another. And you'll notice that, let me see if I can zoom in just a little bit. Okay, so you'll notice here you're selling this put with a 58.30 strike, and that's already been pre-built for you. But if you wanted to change it, you could, but the algorithm has pre-built this position and created it for us. Now, you see the delta is at 9.9%. So what did we learn about delta? Well, those are probabilities of the option expiring. As in this case, you know there's a 90% plus probability that this option that you're selling to someone else will expire out of the money. So the algorithm has chosen this along with these other strikes. This call option that's being sold has a delta of 3.22. So you're looking at almost 97% probability that this call you're selling to someone else will expire out of the money. And then you had the put and the call to buy it as your hedge or protection to make sure you're not trading naked options. Everything we do is covered. And it always defaults to a sell when you're doing this. And the quantity defaults to a 1. So you can change the quantity here. You can see all the numbers changing. We'll just go ahead and do 10 of these for the sake of argument here. And we're selling the spread, meaning we're collecting the premium. We are the sellers of the option premium and collecting the premium. Someone else is paying the premium. And we'll go ahead and just place that order. And that's really all you have to do. And you can see here it shows up as being filled just because it's a demo account. And you can see there's another order filled earlier today as an exit strategy. But let me go back and we'll look at a dragonfly next. So you saw the condor. Give it just a second here, folks. Always seems to take longer on the webinar days. Okay, so here is a dragonfly, and I just default to using whatever has the most days till expiration. So this is the E-mini S&P 500. Again, the algorithm is pre-selecting everything. September into month expiration has 70 days. Selling the 5650 puts and the 6900 calls. This is the E-mini S&P 500. Maximum profit potential here. Okay, so here's what it looks like. So let me explain the dragonfly. Now you can notice on the condor, there were you sell a call and you buy a call, and then you sell a put and you buy a put. The dragonfly is different. You do it in quantities of 4. So you sell 4 options, in this case, 4 calls. Then you buy 3 further out of the money calls, and then 1 closer to the money. And the one that you buy, remember, you own it, and it's closer to the money, so the delta is higher. So that means it will actually gain in value more rapidly than the others that you've sold. And also theta decay won't impact it as negatively or as rapidly. So this can really change the whole dynamic of a position compared to a condor. And you have the same structure on the put. So if the market were going down, remember, you buy this one put here, and you sell these 4 and you buy 3 further out as a hedge to make sure that every short option is matched with 1 long option. So that's also a covered strategy. So again, this is not unlimited risk on these strategies. So these are not naked options, but I'll show you the difference between a condor and dragonfly. The condor is probably a little more aggressive, has a little more profit potential when you compare apples to apples. But at the same time, it's maybe not as robust in certain cases. So the dragonfly may actually be a winning trade when a condor is not. And a dragonfly might actually allow you to close out a trade earlier compared to a condor. And we're going to show you. So here's the cash required on a dragonfly is about $4,600. And I should have pointed out on the condor, it's a little less than 1,000. And you're selling 4 puts. And again, the strike prices are all pre-selected. You could try to change them here. And you'll see the delta of 9.8. So over a 90% probability that the puts that you're selling would expire out of the money. And then selling these 4 calls here, 6.2%. So, 94.3% probability or so that the calls you're selling to someone else will expire out of the money. Then the puts you buy here and here and here, and the calls you buy are for protection as a hedge. So it always defaults to a sell. You're selling the spread to someone else and collecting the net premium. Maybe we'll do 4 of these, trying to collect almost 9 points on each one. And there you go. It's just that simple. Okay, so I want to show you another feature we have. We have a trade simulator, and let's compare the condor and the dragonfly. And I put up a couple here, and let me squeeze this down. Hopefully we can see the screen better. Okay, so here's a condor for June into month. Imagine you placed a condor on May 27 of this year. We'll use these buttons to go forward in time and backward in time. We could go all the way to the end in one click, but I want to kind of play it out so we can follow along here. So you sell a condor. In other words, you sell a call spread and a put spread, and you collect premium for doing so. And now here's the market kind of going sideways. see the RTI is green. That means do nothing, all is well. And we want theta decay to start working now. And of course it will. Theta decay is something you can't avoid because options always end up with less or zero time. So for these strategies to work, a little time has to pass is really the point I'm getting at. You're kind of watching the clock tick and you're looking for the market to stay in this range between the calls you sell and the puts you sell, generally speaking. So all is well. And then you get a blue profit taking signal here with that blue square. So you can automate this so that when it turns blue, Theta Trader will automatically track your position, monitor your account, and then place the order for you to close out that position. So keep in mind, this was on June 20, 11 days till expiration. So write that down, had 11 days till expiration, and you got out of that trade. So that was fine. So here is a dragonfly. Instead of doing a condor this day, maybe you did a dragonfly, or maybe you did one of each. So here's the dragonfly, same June end of month expiration. And obviously the market's the same, it's going to make the same movement. And you can see here the RTI is green, it's doing well. And look at this though, it turns blue with 15 days till expiration. So about 4 days earlier, you would be able to close out this position and take your profit in this case, if that order is filled, and then move on to another trade. So that's what I mean by the dragonfly can be more robust at times and mature more quickly and allow you to actually close out your position earlier compared to a condor. Now let me show you another example of a condor versus a dragonfly. So this was on April 30. So you can see it turns yellow, it turns orange, a little more elevated risk, and you can see why. It's getting right up to that upper boundary. And then it turns red. Too much risk, take a loss on that trade. Now, when it turns red, you can also have this automatically submitted so that the order is placed for you. You don't have to monitor or track it or do anything. So this condor ended up being a losing trade if you had this automation set up. Now let's compare it to, and remember, this is the end of month May expiration. Now we'll compare it to the dragonfly. So the same market movement. You're getting elevated risk because the market's moving rapidly higher, getting closer to those short calls that you sold. But in this case, the dragonfly did not generate a red RTI or a loss. And that's the big reason why is because you own this call option here and it's gaining in value more rapidly and it's acting as a hedge, acting as additional insurance. And so then you can see what happens is it actually turns blue right here and becomes profitable, and you get a blue profit taking signal. So we really like the dragonfly a lot. It can be more robust as we've seen. It can generate an earlier exit, or it may generate a profit when a condor does not. And I also want to point out that Theta Trader does more than just premium collection. You see here, there are bullish strategies and bearish strategies as well. We have some butterfly calls on that we took profits on yesterday, and we have another round sitting here waiting for more at the moment. But you can do all your traditional strategies as well, not just condors and dragonflies. I want to make that apparent. But there's also something called a bear hedge. It's really just a combination, they call it. And let me show you what that looks like, or a bull hedge. But it's just a way to express yourself in terms of a bullish or bearish outlook. And we're going to look at a simulation on that real quickly. And feel free to ask questions in the chat and so forth. I can't see them at the moment, but hopefully I can get to them. But this is a bear hedge. If you're bearish, maybe you sell an out of the money call spread. And what you can do is take the money you collect and you can buy an out of the money put spread to help finance, the call that you sell, the call spread that you sell, finances the purchase of an out-of-the-money put spread. And oftentimes you can do this at even money or a credit, so it doesn't cost you anything on a net basis to actually have that position. But that's what it might look like. You can see the expiration date. So if you're bearish, that's a possible spread or combination you could do. And just wanted to point out, here's an example of one of how that could work. The colors are different because you're long the position, but you see here, you place the spread, so you're long this call spread and you're short this put spread, and then the market rallies, and this trade works out real well. But just want to point out that we're not just only neutral. We like really any kind of spread, but when you're looking at math and the probabilities and the statistics, if you're collecting premium over time, the math would suggest, the probabilities would suggest that you would be favored by collecting premium. Now, let me point out as well, let me go back over here. Up under the My Account settings, we have all the different elements here, and they show you how to automate this right under settings here. So you go under My Account and under settings, and then you activate the risk manager. You check that button, or I should say that box, but you can then set the level of risk that you would like, less or more aggressive. So right now it's at red. That's the default level in terms of when the red RTI box would signal and trigger an order to close out a position. You could use orange, and that's fine, or you could use a custom level anywhere from 50 down to 25. But keep in mind, if you did something like a custom level of risk at, say, 0.25, then you're going to have smaller losses, but they'll be more frequent. And the same thing with the orange compared to the red. So that's fine. If that suits you better, you can do that. But I just keep it here on the red default level, and then you click save. And then the profit directive here, you check that box. And then whenever it hits a red or a blue RTI, you just save those settings, and then that's all you have to do. So the automation now is set up in your account to close out your positions for you. There's also research we have up here called TradeScope, help inform you and give you some oversight, I guess, or additional context as to what's happening. We look at a couple simple charts. We don't overanalyze things here, and maybe looking ahead as to what's happening with the economic calendar and earnings on the horizon. So this is all our proprietary research. In fact, let me show you the next section here. I wanted to show you about the color coding and the RTI. We have a help file here. And you scroll down, you'll see all the color coding explained here on the RTI and how it works, and then all the details on all the acronyms and so forth within DataTrader. But everything's explained here. And now let me go back and show you what probably is the best feature of all. And also you can look at your open positions here on the dashboard. I forgot my forgot my word there, right here. Or if you want to look at open positions on one big page, you can do so here. And you can look at your closed positions too. I'll just show you what that looks like. And again, this is a demo account, so I wouldn't assign too much weight to the results on this closed position page. Let me zoom in a little here. Well, maybe that doesn't work. This is probably better. So you can filter any way you want by date range, but you've got 20 of the last closed trades here. You see a total of 20, 17 winners, 3 losers. There were 15 short positions or short spreads where you collect premium. There were 14 winners and 1 loser, and then 5 long or bought positions or a debit spread. The short positions are called credit spreads where you collect money. So 3 winners and 2 losers. But you can see that all the results here, if you want to look at any one of them, maybe you just click on it and you can go back, see it's highlighted here, that gray highlight, and you scroll down, you can see the trade. This is what it looked like, the history of the trade, placed on May 15. It had 65 days till expiration. And then you can see day by day transpire. The RTI is green. And you can see it's always starting off a little negative because time hasn't elapsed yet. Theta decay hasn't had a chance to work. And that's pretty typical with short option spreads. But you can see it starts to gain some profitability here. And then you get the blue profit taking signal here with 31 days left till expiration. So that just gives you an idea of going back in time. But again, these are just random trades I place. Don't assign too much weight to it, but just wanted to point out you can look at all your closed positions here on one trade or one page. Now here's a trade simulator. So we've kind of seen that, but I want to show you here on the dashboard. Let me go back and look at the trade alerts, and then I'm going to show you what it looks like on the dashboard of your Theta Trader page, and then also when you receive the alert on a smartphone via text message. So here you can see the alerts. When you receive an alert, it'll show up on your dashboard like this and also via text message. And so I've already clicked on it here. So this is what it looks like. You'll get an alert. This is selling in September end of month Dragonfly spread, has 70 days till expiration. You get all the details here. You can see the graph selling these 4 calls, buying 3, and then buying 1, and the same structure with the puts. You've got the vertical line representing the expiration date. Now the quantity is pre-selected for every alert that is in your account. So every alert you receive is customized and tailored to you and your account. So in terms of the sizing of it, meaning the quantity, and also it won't concentrate your risk. So if you already have Dragonfly in this particular expiration, then you're not going to end up getting another alert with the same exact trade or even too similar. Now you can change the quantity by lowering it, but you cannot increase the exposure and the risk. So maybe instead of 7, you want to do 5. And you'll notice here, everything is pre-selected for you in terms of the quantity, the trade, the strikes, trying to collect this amount. This is the cash required, has 70 days till expiration. And if you like it, you just touch accept, and that's it. So if you're on your dashboard, that's how easy it is. Here's a Iron Condor. Deltas are 8% on the sold call and put strike here. A little note there on that alert. So here's the expiration, selling an out of the money call spread and put spread. Quantity pre-selected for this demo account, we'll do 24 just because shorter dated trade. So this only has 9 days till expiration. And we'll go ahead and accept that. So that's how easy that is, folks. Now, let me shift gears here. And we're going to look at getting the alert on your smart device, otherwise known as your phone. And you can respond to trade alerts with one touch. So these are integrated live alerts with your AltaVest account. You simply touch accept and place that order. So here's what it looks like. This is actually my phone. I just took a screen capture of an alert, and you'll get a text message. It's a link, hyperlink, of course. So here's what it might look like. It'll take you to the alert page. And it has a very familiar look from what we just saw, right? You get an explanation of the alert. You get a graph of the alert, all the same information we just saw. This just comes on your phone. There's your call side of the trade, the put side of the trade. This is the Dragonfly, and there's the current market. And then the quantity 7 in this case, you see you're trying to sell it at 9.6 points and collect that amount of money. We talked about changing the quantity. You can always go lower, but you can't go higher. You can't increase the risk. So we move that from 7 to 5. And then if you like what you see, you just use your finger and touch accept. If you don't like it, you touch reject, and that's it. So our Theta Trader technology handles everything else from there. So that's how simple it is to get involved with trading these, I guess you could say, institutional style of professional option strategies, and then have them monitored for you on your behalf with our technology. So here is how you can get started with Theta Trader. So everything we just saw, the Theta Trader software that includes all the theta trades with the pre-generated, pre-selected trades by the algorithm, that includes the risk thermal indicator. That's our favorite indicator. So kind of tracking on theme with the event here with timing research, favorite indicators. So you can automate your risk and profit. And then that trade simulator, you saw how you can go backwards in time and use those animated charts. We call them living charts, and use that button to play it or stop it or go backwards or forwards in time. So that technology valued at over $3,500. And that also includes the trade alerts. And you've probably never seen anything like that before, where you don't actually have to copy an alert and log into your brokerage account. All the technology is handled for you, where everything is integrated with your trading account. You just touch accept or reject. And then once your trade is filled, then you saw how the RTI indicator will automatically manage that position for you, valued at over $4,400 for that trade alert service. So again, everything we just saw in Theta Trader valued at over $8,000. But along with it, you get real people, you get us, and we'll help you along the way. I mean, it's in our interest that you do well. That should be, I guess, self-evident, but we'll work with you on private coaching. We'll share the screen with you and walk you through anything you want to talk about. We're all licensed and experienced traders. Now, how much would this be worth? I just pulled this off of a Forbes article. It says here they're talking about trading coaching. Comprehensive packages with experienced mentors range from $5,000 to $15,000 for 6 to 12 months. So what we're saying is, with Theta Trader, we are here to help you. So that's part of our job. That's part of what we do. That's part of your Theta Trader package, to be your co-pilot, work with a licensed professional, discuss your strategy, review your trade history, valued at over $10,000 plus for sure. Absolutely. So to summarize, everything you get with Theta Trader, all the technology, the coaching, worth over $18,000, and then sounding a little bit corny, like an infomercial, that extra bonus. Remember, we have the daily research, our proprietary newsletter, TradeScope, so that'll help you along the way, give you some guidance. And then we also have education. We call it our Futures and Options Masterclass. We've got 6 chapters. They're all in kind of digestible, bite-sized pieces, anywhere from, I think, 10 to 15 minutes. So you don't have to sit and watch hours and hours and hours of training. So we're going to basically tell you and show you what we think you need to know to make this type of strategy, part of your toolkit. So you get the Futures and Options Masterclass, all included with the research, yearly value of over $2,900. We also have the online tutorials. That's just part of Theta Trader, kind of as an extra bonus. We obviously want you to know how to navigate through Theta Trader, but it is very user-friendly and intuitive, so you won't have any trouble with that. So everything we talked about, valued at over $21,000. That's really what we call our Theta Trader options package, or professional options package. But of course, we're going to do much, much better. Now, we used to do this for $4,000 when we would go to in-person events and we'd hold seminars and hotels and whatnot. $4,000. But of course, things are different these days. That's why we like these webinars. We can reach a lot of people all over the country, even all over the world. So it's even going to be less than what we charged in the past. One-time payment is only $597, and that's a lifetime membership, folks. I want to make that clear. Some people ask, well, you mean every year or every month? No, one-time payment, lifetime membership. So here is the link, cf.altivest.com/TR. And you can use the QR code as well. And just a simple, few lines, and submit that information, and we'll get you signed up. You'll become registered with us. We'll get you the login credentials and get you started and on track. And if you want a free membership, you can do that. Open your trading account within a month, and if you have 100,000 or more, we'll rebate 100% of that membership. or 25,000 and up, and then you get a 50% rebate. So people love taking us up on that opportunity to save a little bit of money. And, even you've had people open with big accounts and they still want that rebate. So I don't blame them. Who doesn't like to save money? And we do have a 30-day money back guarantee. If you change your mind after 29 days and 23 hours, that's fine. Let us know. We'll rebate your membership. So you have no risk on that membership fee. I think you really love using Theta Trader. We can get you set up with your login credentials and you can use it and get familiar with it. And I think one of the big reasons you really need something like this is, part of your trading arsenal, let's say. This is your competition now, folks. Algos and AI. There's no emotion. It's automation, built-in controls. More than 50% of global trading is controlled by computer algorithms and non-discretionary strategies. So traditional fundamental analysis is no longer enough. So remember, as humans, our emotions can't always compete with the algos, and Theta Trader and the algo-driven option strategies, I think, can be a big help to you, where you collect premium like an insurance company would. You don't always have to do that, but that should be a big part of what you're doing when you're trading. Insurance companies, what do? They get paid premiums. They sell and manage time, but they always insure themselves and hedge themselves. It's called reinsurance. They're consistent and they're patient, and they look at math, the probabilities, the favorable, statistics, and the actuarials and things like that. So that's all we're trying to do here, folks. And do not trade like a rookie. Remember, we talked about a one mistake. So what is the mistake rookies make? Well, here it is. Majority of small-time traders are buying the most basic call and put options. They have a much lower probability of profit versus advanced strategies like options spreads. So I don't know. I couldn't have said it better. So rookies rely on only buying options. And remember, if you do that, Theta is always working against you. And a couple other comments from her. She says the appeal for the retail investors to buy options is that they're much cheaper, but potential for profit is actually not that high. In 2021, 11% of Robinhood's active users made an options trade, but of that, fewer than 1% actually made a multi-leg options trade. So that's pretty astounding. Now here's a comment here from John Foley, CEO of Options AI. Everybody in the business knows that if you're only buying out of the money calls, you're likely going to lose money over time. The question people should ask is not can I trade options, but can I have straightforward access to the option strategies that Wall Street uses? So I couldn't agree more with Mr. Foley. So just to summarize some of the benefits of trading on the E-mini stock index options and using these spread strategies, these professional Wall Street strategies, there's no margin calls when you're trading covered option spreads the way we do. So everything we just saw, you're not going to have margin calls. These are not naked options. Every position is insured. Your maximum risk is capped in advance. So these are covered strategies. So not unlimited risk and no margin calls. So only trade covered spreads like we do. I wouldn't advise naked option selling. So you don't want this. You don't want a margin call. This woman here says, whose margin and why does she keep calling you? So you don't want to be in that situation. So none of that, folks. And tax efficiency. So E-mini options, in fact, all futures options are tax efficient. And that's because they're treated differently by the IRS. 60% of the gains are taxed with your capital gains rate versus your personal income tax rate at 40%. And of course, we all know 60% of the capital gains rate is typically going to be lower than your personal income tax rate. So that's why you get a big benefit with the tax efficiency. You can use your self-directed IRA as well. Just want to point that out because people always ask. So we have people transferring IRAs to us often. And here's an example. If you're trading futures versus trading individual stocks, you have $100,000 and maybe there's a 20% return. Well, if you compare that to trading individual stocks, you save over $2,000 in taxes. if you're trading futures versus individual stocks. So just a simple mathematical example on the tax efficiency. But one other element here is there's no more itemizing when you're trading futures. So that's a big advantage. You just receive a 1099 with your profit and loss at the end of the year, and that's it. But always consult your tax attorney or advisor. And we mentioned IRA. They're absolutely call us, ask us about that. People transfer those to us often. And remember, Theta Trader is what you might consider an alternative investment solution. So it has a low correlation or absolute return possibility. So if the stock market's moving up or down, if you're using option strategies, they're so flexible, you could be doing anything. So it's not always correlated to what is happening in the broader market. So that's a big benefit. These are automated, non-correlated option strategies you could use for speculation or hedge your traditional assets or stock portfolio. And summarizing the benefits of Theta Trader, these are flexible strategies for any market condition. These are professional strategies too for premium collection. So what would otherwise be complicated, Theta Trader simplifies it for us, and they're convenient. So with the automation, it can save you a lot of time. You don't have to babysit your trades all day. You can diversify with these various strategies or hedge. Again, what we call non-correlated strategies. A lot of people have brokerage accounts with equities in them, and everything in their account moves up and down at the same time. So that's really not a good situation to be in. So, and then the trade alerts, the one-touch responsive trade alerts, very unique. You've probably never seen that before. And we mentioned the tax efficiency benefit. And then also here's something I didn't mention, but I just threw it in here last minute. There's no pattern day trading restrictions in the futures markets. So big benefit there. If you're trading often in securities, you're going to be designated as a pattern day trader. And then there's various restrictions and conditions and reporting requirements and things like that. And you won't be able to place a day trade if your account falls below, $25,000 and things like that. So you don't have any of that with futures and futures options. So again, just to kind of get close to wrapping it up and ask, maybe there's a few FAQs or questions here. You can respond to trade alerts by just touching your screen, or you can go to your dashboard or via email. This is what it looks like on the dashboard. We saw how that works. Place the trade. Here's an email. You get an email. You just touch that link. And then, of course, you get a text message as well. And then once you accept the alert, it's done for the day. You can't keep accepting it over and over. And you can always lower the quantity. We talked about that, but every alert is customized for you. And then that's how it works. So love to have you come on board with us, folks. And there's the link there. And let's see if we have any comments or questions along the way. Okay. Well, that's a good question. Someone asked about assignment risk. We're always closing out. If you have the automation set up, you're always going to be out before expiration. So there's always going to be a red or a blue RTI triggered one way or another. So for better or worse, you're going to be out of that trade. Hopefully it's because of a blue RTI, which means you've taken profits. But we're always going to close out. We can't do it for you. We're a brokerage firm, so you have to authorize, these transactions. But if you set up the automation, kind of like having a stop order in place or a limit order for profits, those are going to be triggered before that position expires. So you don't have that assignment risk or any margin call getting triggered. And how many DTEs? Well, it ranges. You can get down. Some of the alerts that might come to you sometimes have been very short dated, maybe a day or two. The dashboard is typically going to display alerts from maybe a week out to 60 days of DTE. So those are good questions. Hopefully I answered it. And what software? Well, Theta Trader is the software. So Theta Trader is our software technology. So you have a trading account, you open a trading account with AltaVest, and then you would use our technology to place your trades and receive the trade alerts and all that good stuff. So hopefully I answered that question. And let's see if there's anything else coming in here. Yep, I see the link in there. And that's good till Friday night. So you'll get that special deal. It's only $5.97. And then you'll see if it expires, it'll revert back to a page. I think the retail on the site is double that. So go ahead and take advantage of that deal, folks. It does expire. And I want to point out too that we can work with, obviously people in the US, but there are certain countries in the EU, unfortunately, that we can't work with. If you're in the UK, of course, that's okay. If you're in Canada, that regulations say we can't have an account with you. So, or you can't have an account with us, but sorry about that if you're out in Canada, but we get a lot of people asking about that. And let's see if there's anything else. And then people ask about the amount of capital to use. One thing I could mention, a couple things real quickly. I better get off the phone here. Each dragonfly has a margin of about 5,000. So if you want to do dragonflies, we suggest a minimum of 20 to 25,000. So anyway, I better get going. And thanks, Dave, for having me. And I think I am out of time.